It doesn't paint a great picture as we pick up the trade again into tomorrow's session by any means. And we knew this was going to be a big key heading into the final stretch of the year.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Well, we're going to talk about what happened at midweek this week. Well, it's the day when we got the Fed announcement. It came out a short time ago, and I have Joe Camp of Comstock Investments with me here. And we'll talk, first of all, about that breaking news. And then there's a whole bunch of other stuff that we need to talk about today. So settle in and grab a cup of coffee and relax for a little bit here, because we have a little bit of information to dissect. Okay, Joe, first of all, let's talk about the Fed announcement. What did they end up doing today?
They reduced the economy's main lending rate, the Fed funds rate, by 1/4 of a percentage point. That'll be a full point since it started going lower in September, down to an upper range of 4.5%. And as expected. Now, really key for the market and reaction is what's ahead in 2025. And that's what's initially leaning more hawkish. To some expectation, I would say that we thought we would get this cut, but then Fed Chair Powell, right now as he speaks, he's got to talk tough about getting that inflation reined in. That's another feature of this week's outcome for this latest Fed meeting, that the Federal Reserve did up their inflation target going forward to back above 3%. And you also have that then reducing their projections for how they'll reduce rates next year already. It was in the last meeting thought that they'd bring it down another full point next year, and they cut that in half on this week's finish. So again, more to come, though, as Fed Chair Jerome Powell talks. He's shifting now from the economic speak to the monetary policy, and this market's really going to key in on these comments, and that'll be the deciding factor for whether or not the stock market, for example, can reverse back higher after taking a hit along with the metals, and or this dollar, as strong as it is, back in response, if it can level off. Another important couple of hours still to come.
Yeah, the equity trade is really taking a hit after the announcement. As we record this, it looks like it's down roughly about 300 points or so. The dollar is really rallying because of that. Now, is that because of the correlation between it and the interest rates on the long-term bonds, or what?
I think generally speaking, yeah, it would be that surprise to many reduction, at least as sizable as it was, again, cutting in half the projection for next year. We know that the relatively higher rates, especially if the U.S. Federal Reserve is going to have to pump the brakes just a little bit from the accommodation earlier planned, again, relative to the rest of the world, which is seemingly being forced because of their economic weakness as well to reduce rates even faster. And you have that flowing towards a stronger greenback here, continuing higher, as we know that relationship between the higher relative rates and the money that it takes, the dollars, to get your hands on those bonds. So the response here, really clearly hawkish or negative for the stocks, safe haven bullish for the dollar, but bearish right away for these metals we're keying in on. But do we get that reversal? Some signs of that, but we'll know more as this afternoon rolls on.
But the weird thing was, here a while back when they cut their rate by 50 basis points, everybody thought, well, that would maybe trim the interest rates on the bonds. It didn't. They went up a full point. It had the opposite effect, didn't it?
That is right. And you can have worry about the long-term projections for the Federal Reserve and their ability to manage rates. So that causes nervousness and will continue, I would think, to do so leading into 2025. We know Fed Chair Powell is supposed to stick around for another couple of years, and it'll be his mandate to continue not only trying to support what is a generally firm enough labor market for now, but just trying to get that inflation down has been such a problem. And I know, of course, we deal with inflation and the ramifications of it in the agricultural markets on a daily basis. This only seems to, unfortunately, lean even more negative on this broader agricultural market that was already down in the dumps before we had this announcement out today.
Yeah, speaking of that, I mean, it's not like the soybean market needed any help to go to the downside today. Now that we have a sharply higher dollar, looking at the chart right after the announcement came out and what the Fed was going to do, soybeans went down even more. They took off another 3 or 4 cents after that announcement. This is getting kind of dire. I mean, the soybean charts just look terrible right now because they broke through support to the downside, right?
New contract lows for the soybean contracts. You still have some room down to a continuous chart low in the 930s. Below that, you get to the even money $9 mark. Does that do anything for the buyers to encourage them to step in? Under there, we've talked about it a few times, the 2019 and 2020 lows, 780 roughly, and just above $8. And that's still a long ways down, of course. And again, from here, not much below technically that you can find to support this market until you would maybe start to believe that the market's overdone in the short run, sort of oversold by the volatility indicators. That could be the case poking out for the soybean oil, which has been such the leader lower. We got to talk about the soybean oil again and the political spark that really turned this market lower this morning. You have the plan potentially for a continuing resolution and a funding of the government. Well, it did not address any extension of the renewable fuel blending credits. And so there's just so much unknown and uncertainty out there. And it started with the bean oil again, heading lower to weigh on these beans and send them to the new contract lows we mentioned.
So in that CR bill that was proposed, they are talking about allowing E15 year round, from what I understand, which would be a good thing, you would think, for the corn market based on ethanol demand, but yet corn went down anyway. I mean, is it just caught in the downdraft from the soybeans and it just can't overcome that, or what?
It did seem that way, that the soybean weakness was too much for the corn and the wheat futures, which had started the morning session with some notable strength, in part probably tied to what you mentioned about the year-round E15 sales. So the ethanol side of renewable fuels obviously faring better in this outcome relative to the soy-based renewable diesel. Still more to come on that because of, again, no extension of the existing credits. For one, those could still be added, it would seem, before all is said and done. But two, it coincides with the unknown about not having those 45Z clean fuel production credit rules yet from the Biden administration Treasury Department. Can that still come potentially even this week? We know the deadline is the end of the calendar year. This is over 2 years since it was passed as part of the Inflation Reduction Act, and still no guidance on what is supposed to become a law starting January 1st. So you throw those two items in together this morning, it's pretty obvious to see why there is that starting weakness in the bean oil and the no help anywhere for the soy complex eventually, and that did get into the corn and wheat as well.
We're doing events like we're going to be doing with Comstock in I think it's February coming up, and it's just right now it's we've kind of gotten into a rhythm, and we like doing what we're doing, and it's been really rewarding. So for right now, we're kind of just rolling with it and having fun.
If we don't drive home the negative consequences of not doing it, and we don't make people aware of those things that they're not doing that can help the culture in their business, they're not going to do it.
Come with an open mind. If you're a person who's hesitant to social media, I definitely understand that some people do not see a value in it. And I do think social media can be a massive waste of time if you're not using it correctly. So if you're skeptical, that is fine with me.
Kind of the stereotypical State Farm corn and soybeans. We just rotate every year, so just shy of 2,000 acres.
It sounds awesome. I know where I'm in Des Moines, Iowa. I enjoy telling stories and telling our story and telling what happened to us business-wise. You know, there was a lot of good and positive things. There's been negative things. There's been a lot of mistakes. You know, a lot of what we learned from is like, oh, we screwed that up. We could have done that better.
Family Farm Masterclass that'll be coming up in February in Des Moines, Iowa. Now, the rumor mill this morning had been talking about that CR would contain a 1-year extension of the Farm Bill, kicking the can down the road again, I see, if that would be the case. There was a lot of optimism when the news broke that this continuing resolution was being bandied about there in Congress. But on the other hand, you have a lot of naysayers saying that after the last election, they're going to put a stop to all this last minute spending like that. And this is not a done deal. I mean, there's still a huge unknown about this whole thing now. They have to decide by what, Friday?
Yeah, it's all of a sudden fund the government or shut it down. And if they're going to fund the government, it would seem that the current proposals are going to include that farm bill. But as you mentioned, there are those that say, hey, strip it apart, just fund the budget and go one by one, and let's get into the new government 2025. Others would say, well, what does that leave Congress to do when they're supposed to be confirming President Trump's cabinet appointments and working on so much more? Maybe it is nice to have the farm bill extended, and then those can be parts of more specific budgetary developments early on in 2025. But up in the air, notable, of course, was that this, at least as proposed legislation, would include the funding over $20 billion for disaster relief, particularly those recent hurricanes, and then mention of a $10 billion earmark for economic relief payments to extend to farmers that have suffered economic losses with the relatively lower prices these past few years.
And I can hear the howls coming already from people that would be opposed to that, saying, well, farmers had record profits the last 2 or 3 years, heading up until about a year or so ago. That's going to be kind of hard to put that fire out, isn't it?
Well, it's really hard to try to position against the farmer. And of course, the hardships faced, in part the ambiguity of the government policy and all that's going on there. It's more about what you mentioned, I would think, about just simply the funding aspect of it in general, and whether or not we could pull funds from the Inflation Reduction Act, which many in the GOP would look to target for repealing at least parts of heading into the next calendar year. It's just so much up in the air. And one of those opponents that you would allude to in those examples would be Speaker of the House Johnson. And it is a scary prospect to think about the 20th, the end of the week, just being less than a couple days away, and that needing to get through the Senate and to Biden's desk. But we'll see. This market will be very sensitive, no doubt, and that could be the few things that are the savior for soybeans as they look so ugly, or the broader market here as it's on its heels, is that we do have some pop up last minute 45Z guidance, and they do get a deal done to at least extend the government and not shut it down, and it includes some guidance on the farm bill and some protections for farmers. It could make this market maybe change its attitude a little bit for what otherwise looks like a really bearish sentiment shift again here.
Well, looking at the livestock side here, the cattle market definitely had a bearish turn today. Is that related to the drop in equities now?
Well, early on, there was that nervousness, maybe some positioning, and the general expectation that we will have this hawkish type talk from Fed Chair Powell. I would expect that could have led to the speculative profit taking. They'd really been still defending those bullish bets on the cattle futures and the hogs too, for that matter. But then in front of this outcome, the Fed meeting wrapping up, saying, let's at least step partly to the sidelines and see what happens. And rightfully so, as we saw that fallout for the stock market. It doesn't paint a great picture as we pick up the trade again into tomorrow's session by any means. And we knew this was going to be a big key heading into the final stretch of the year. We would think that normally the last couple of weeks are friendly for the stock market. They also show that they can be relatedly bullish for the agricultural futures. The livestock there are going to be hinging on the stock market action over the course of these next 10 sessions or so. Will we have that Santa Claus rally that allows this to be a brief correction lower for the cattle and hog futures, or is it the beginning of a broader souring that we got to watch out for, a bigger breakdown that we possibly have to get in front of? These are the conversations, of course, we're having with our livestock hedgers.
Well, the lean hog futures appear to be the weak sister of the livestock complex, don't they?
You can see that technical rollover lean more negative. The expiration now of the December contract and not the follow through from those speculators that had also, again, been very bullish. Record net longs built up in the hog futures. So it can be just as quick as that you see others rushing for the exit, and those money managers want to head for the door as well and take what they can after what had been a really remarkable run up in price these last several weeks. So it is, in my mind, a stepping out in front of the Fed meeting and potentially, broadly speaking, ahead of the end of the year. But then waiting to see if there might be corrections lower that restore value in what are still fundamentally bullishly supported markets. That's why these speculators were at such lofty bullish net longs, is because they did believe in the fundamentals that got us here in higher prices. It just is simply a seasonal point where we wonder about the market possibly turning now.
Well, I appreciate you taking time to explain all this. There was so much going on in the marketplace and in the news arena here on a Wednesday. So thanks for helping to decipher all that. And as it turns out, the way the calendar works out, a week from today, when I normally would talk with you next week, that happens to be Christmas Day, no markets that day. So you get the day off. And I wish
New Year's too.
I wish you and your family all the best for a very Merry Christmas and a Happy New Year. Look forward to talking with you here before too long. The thing is, the week after that, then we're looking at the New Year's holiday. So could be a little bit. We'll see if we can jockey things around and get you in here in the next week or so anyway.
Thank you.
But I appreciate that, Joe. Wish you all the best. All right.
Thank you. Same to you and all the viewers. Merry Christmas, Happy New Year, and talk with everybody soon.
Catch you down the road. Joe Camp with us of Comstock Investments. And that'll do it for this episode. For producer Breanne Jenkins, I'm Marlin Bohling, and we'll catch you next time here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.